Hey, Miss Bridget, can you hear me okay?
I can hear you.
Awesome. I think this works better than the Facebook.
Okay.
Uh, can you see me okay?
I can.
Awesome. All right. Well, we're not going to belabor the time. All right. So we're going to jump into it. Like I said, this is our live training slash analysis. Basically what I'm going to be doing is just kind of initially going over the strategies that we share, and then we're going
Okay.
to take a look at the chart um, based on these strategies. And then, if you have any questions, feel free to ask. Um, and we'll just kind of, we'll go from there. We'll just go from there. All right.
Okay. hmm
All right. Awesome. Okay. All right. So, all right, let me just delete this so you can see my MetaTrader 4
I can.
screen. Okay, awesome. And let me turn this up so I can hear you a little better. Okay, all right, awesome. All right, so right now what I have set up is it's a profile, and basically what your profiles are is you can drag in some charts and save those charts. And so this particular profile, I call it the quarter swing, my quarter swing analysis profile.
Okay.
And so basically what I like to do is to um, work with the pairs with the smallest amount of spread. And so that's basically on the Forex broker, it's from 2 to 10 pip spread. And so that's what I have listed here. And so the way that we get that is by connecting to now. Do you see my screen? You
I
see my
can.
you see
hmm
my screen and my picture, or
I see your screen and your picture. Yep.
okay, okay, awesome. All right. So this little button right here is called the Market Watch button.
Okay.
And so that's the button that you click to pull up your currency pairs.
Okay.
Um, Now you may not see anything, and if you don't see anything, what you're going to do is actually just right click inside that space
Okay.
and select symbols. And once you actually come into the symbols, now this I would say this will vary based on the broker that you're with. Right now I'm using FX Glory. That was the one that I used initially. I also have an account with Traders Way,
Okay.
and with Traders Way, I know that you can kind of jump in the cryptocurrency.
Okay.
But it's still the same way that we're trading now. You don't actually hold on to it. You just kind of take advantage of the exchange that's taking place in the market. So so depending on the broker that you decide to go with, this will actually change. And so if you want all of the Forex pairs to show, all you would basically do is just kind of click on Forex and then hit show, and that'll show everything. Now what I've done is I've gone through, and like I said, I really only like to work with the small spread pairs. So what I had to do was I clicked show all, and then I actually went through and deleted everything that was over 10 pips.
Okay.
Um, so I won't do that now, but I'll let you do that. And
Okay.
you can just kind of go through your own time, and just kind of sort it out. But
Okay.
um, now what I wanted the trainings to be, I guess, the analysis is going to be like the two main strategies that I push. And so we're going to first look at the quarter swing.
Okay.
I really like this strategy. It's I would say it's an intermediate, strategy, but I really like it because it slows the market down for you.
Okay.
And so you're basically coming in and you're looking for swing reversals. So you're looking for these reversal patterns to take place around these specific price points. Um, I don't know how far you got in the units. Yeah, you told me earlier that you didn't quite get down to the
Right.
strategy. So,
Yeah.
essentially, what the quarter swing strategy is, what I'm calling it. What it is we're looking for the market to reverse for us at round numbers and half numbers. So these are
Okay.
actually psychological numbers that the banks use. All right. So if you just think
Okay.
about it, like, hey, if someone says, hey, can I borrow 99 cents? More than likely, you're not going to count out 99 pennies. You're not going to give them,
Right.
uh, 9 dimes and 9 pennies. You're going to say, here's a dollar. All right. And so what happens in the market is there's typically always something that takes place around these quote unquote psychological points. And so they're basically just your whole numbers and your half numbers. Um, well, they're more than your whole numbers and half numbers, but I focus on the whole numbers and half numbers because that further slows the market down. But the strategy is really based off of what's called the quarter point theory. And that's basically
Okay.
prices broken up into quarters. So you have your 0.25, 0.5, 0.75, and then your whole number. But again, I really push just to focus on the whole numbers and the half numbers because it just kind of further slows the market down for you. And with this strategy, I always say, don't. I mean, it works like on like the lower time frames, but for beginners that can be a little too fast. And then also, you don't want to be sitting at your screen, all day, every day, every 15 minutes, you're waiting for a calendar print to see, to try to analyze where the market is going to go. So I always say, do it on no less than the 1 hour time frame.
Okay.
But I really like doing it on the 4 hour time frame and also the daily time frame. But my main thing I like to look at is the 4 hour time frame. And so what that does for me, it allows me 6 times to be able to take a look at the market throughout the day, and 6 opportunities for me to be able to jump in and possibly catch a swing trade. So let me just kind of show you what I'm talking about a little bit. We'll put this down here and we'll kind of get into everything. So um, what we have here, we have 4 moving averages here. All right. The gold one is the 400 moving average. The white one is the 200, and then we have the red, which should be the 7. I think I made this 7. Let's see. Nope, I made the red the 14, and I made the blue the 7. The colors really don't matter as long as you get the actual moving averages correctly. Um,
Okay.
and so what the moving averages do is they take an average of the market, all right, based on the number. So the 400 is taking an average of the last 400 candles. And so, and it's printing itself here on the screen. And so it always analyzes the close. Well, it doesn't always, but I've selected it to analyze the close of the market, the close of the candle. So basically, it's not going to take the opening of the candle, the high or the low of the candle in consideration. It's only going to take into consideration the actual close, what the candle actually did. All right, and so again, the 400 with this 400, it's taking an analysis of the past 400 4 hour candles because we're on the 4 hour time frame. Um, and so these are basically, I call them our trend moving averages. All right. And so basically whenever you see here, whenever the market is above the 400 and the 200, you see how the market itself is making a general move upwards. All right. And it's making a general move upwards. But whenever it's the market is below the 400 and 200, you see generally it moves downward. And so that kind of that kind of lets us know, okay, what we should be looking for. All right, based on, again, if the market is above our trending moving averages, which is the 200 and 400, and when the market is below our trending moving averages. Now, the other two, I call these our directional moving averages, the 7 and the 14. And so it just lets us know the direction that the market is going in. And as I always say, you know, I really don't like indicators. Like, I really prefer like price action, like naked chart, but this does help. And the reason why I don't like it, because indicators lag behind. All right, so you see here that the moving averages, they stopped, excuse me, they kind of stopped in parade, like, you know, with this last moving candle. Or a 4-hour candle. So they're kind of waiting for the next one to print before they'll actually continue on. So they're lagging, but they still kind of allow us, you know, just a general outlook of what the market is doing. So now, because the market is above the 200 and 400, that kind of lets me know, like, okay, I want to kind of be trying to looking for buying positions. Now, that doesn't mean that you can't like take selling positions, because I take them. I take buy, I take sell. It doesn't matter, as long as it gives me a good enough reason to jump into the trade to where it's most conducive for me to profit. I'm going to jump in. But this just kind of helps. It just kind of helps for us to know, you know, what the market is doing. So right now we're looking at down to the bottom here. We're looking at the Euro GBP. All right, this is the Euro dollar versus the Great British Pound, and this is the 4-hour. So the market did open at 5 p.m. Right. It opened at 5 p.m. And so this candle right here, this is the 5 p.m. to 9 p.m. candle. So this one just finished printing. And for my screen, I've made my bullish candles, the candles that actually show price going up, I made those orange. And my bearish candles, the candles that show price going down, I made them white. So where this one started at, it basically, because it's a bullish candle, it's an orange candle, it basically, here's the opening. The bottom portion for a bullish candle is the opening of the candle, and the top portion for a bullish candle is the closing. So it basically, at 5 p.m., it started here, and it worked their way up a total of 20, it went up a total of 27 pips, all right? But it closed at a total of 20 pips. So this is kind of letting us know that, okay, the market, when it opened up, it still opened up in a bullish position. All right, so what we're doing with the quarter swing is we're waiting for price to come around these psychological numbers. Like right now, it's at 0.905 right here. And so you can kind of see where it came into this area, but we have a wick here. Right. Whenever you see a wick, that just lets you know that price did come up to this point, but it couldn't break this point, so it came all the way down. So that's a rejection. All right. And so it was rejected here. It never broke over spot 905. It broke a little bit going up, but you never got that confirmation that it will continue up. And so it could not break this area. It couldn't break this area around this spot 905. And again, it's a psychological number. And so what we do with the quarter swing is we wait for a reversal pattern jump in. And so our reversal patterns, the main one that I look for personally are what's called engulfing candles. And so if you kind of look at this portion of the screen right here, let me try and blow it up a little bit. All right, so even this portion right here, it's this orange candle. It engulfs the body of this white candle. So that's an engulfing candle. So I really love I love these reverse signals. Now you can be aggressive, and like as soon as this one prints above, well, I should say as soon as this one prints engulfing this candle, yeah, you can jump in with a buy sell, but I always say wait for confirmation. And so even though this one would have printed, I I wouldn't have got in because the next 4-hour candle, it printed as a bearish candle. It didn't print as a bullish candle. All right. But the next time we get the signal right here, we do get a confirmation, right? So we do have an engulfing candle and then with a confirmation. And so I would have jumped in. So, but you do see that when you jumped in, the next candle, it was a bearish candle. So you would have jumped in and more than likely it went up a little bit. It went up 37 pips. All right. And so, you probably would have been feeling happy, oh, okay, it's going in my favor. But then it started dropping down. It dropped down on you 42 pips. So your account would have been in the negative. So it would have closed here, but the very next one, you see where it started going up. So that's why it's important to be patient. That's why I always say study, and only jump in the trade when you're sure, when you're 100% sure. And so for me, again, we kind of talked about practicing the 100 pip rule, and then also the 1,000 pip rule. And so if you would practice the 100 pip rule or the 1,000 pip rule, even though the market went against you for the next 4 hours, all right, that's a nail biter. Even though it went against you for the next 4 hours, because you're practicing proper risk and account management, you're not worried. You're like, okay, I've studied it. It gave me the sign. It gave me the confirmation. I'm gonna ride this thing out. And then over the next 4 hours after that, you see the market it's gradually rising. And so before it really would have gave me a signal to turn around, it probably would have been this candle right here. When this one right here printed, I would have been ready to get out. But look, we're up 161 pips. And so that's what you call the swing trade. Is when you're in the market and you're looking to hold it over like a very, very long time. So we would have held this for 23 4-hour period. So 23 times 4, that's 92 hours divided by 24. That's basically 3 days. 3 days you would have had 161 pips. People like to be excited about standard. So let's say if you were trading at $10 a pip, you're looking at $1,600 in 3 days. So which is not bad. But I always tell people, listen, if your account is not there, please don't put a standard. Like don't put a standard on your account. The only time I recommend to do that is if you're going to do the 100 pip rule, is to wait until you have $1,000 in your account and then put the standard on there. Because even though we have a good idea what the market is going to do, we're not in control of it. And then so we kind of talked about it today, but the market makers, they're in control of it. And so if they want to, push it back instead of making it go up, they can do that. So that's why we don't get too cocky. All right. So that's basically it. We're basically looking for the market to come up around these different price points, like your whole numbers and your half numbers. And once it gets around there, we're waiting for some type of reversal signal, it's in the unit section, but whether it's an engulfing pattern, a doji patterns. Let me see if I can find a doji candle. This green one right here, this is a doji candle, and so this basically says that the market is at a point of exhaustion and it hasn't decided which way it wanted to go, and you don't know which way it's going to go until the next candle prints. So we see here where, let me see if I'm gonna grab this. We see here where the market just kind of made this, let me grab the right one. We see here where the market just kind of made this rally to the upside. And let me just make this a little thicker. Man, you still really can't see it. Hold on. Take it out the background. But you can kind of see where the market, it just kind of made this rally going up a little bit, and then it printed this doji candle. And so it was at a point of indecision, like, okay, do we want to continue to go up, quote unquote, do we want to continue to go up, or do we want to go down? They didn't know. And so we went on to the next candle, and we do see where after the next candle printed, it did print, and then for this one candle, it went down for a little bit.
Right.
All right, so those are things that I look for. So if I would have saw this doji right here, I would have waited for the next candle to print so it can tell me which way the market was going to go, and then I would have jumped in. That would have been my confirmation candle here. I would have jumped in, and we would have jumped in, and we would have had potentially able to pick up 33 pips, which is not bad, because if you're trading at a standard, that's $330, over 4 hours. It's not bad at all. But we do see that currently the market is going sideways. And when I say sideways, it's just consolidating. It's really not making any major moves up or major moves down. It's just going sideways. It's consolidating. So basically, again, what you're going to look for is you're going to look for the market to, give you a sign. It's going to give you a signal candle, and then you jump in after your confirmation candle. So this method, it slows the market down, but it does require you to be patient, especially if you're on the 4-hour and the daily chart. Right. So I just switched over to the daily chart. So we would have waited a whole day, a 24-hour day, for this candle to print as an engulfing, right? And then we would have had to wait the next day, right, for a confirmation candle before we jumped in. All right. And even though this candle right here, it did print as a bullish candle going up, we do see where just for a little bit, for a total of 13 pips, it did go down in our favor. And so I typically always put in a trailing stop of 10 pips. So basically, whenever the market will move 10 pips, I'm banking those 10 pips. So, whatever your lot size was, that's what you would have made. You would have been able to make that. But to me, what this looks like, it looks like just a little bit of a pullback, and we're gonna kind of move into our other strategy. But to me, what it's making our M formation for our market beta trading strategy as well. So you can kind of see right here where the market, man, if I could just select the right one, where the market, it went up, and then the market came down, and then the market went up, right? And then the market, it came down, basically making M formation. And we'll get into that when we kind of analyze the market beta trading strategy. So that's the quarter swing method. So basically what I want to do is kind of just go through here and to see if we have any setups, just kind of help you guys out with eyeballing this stuff. So we're just going to quickly go through, and it doesn't take long to scan these. So we're taking a look at the EG. All right, and so um, we're in consolidation here, and so we really don't have a signal. I don't see any doji candles. I don't see any engulfing candles. I don't see a reason to get in on this to jump in the trade right now on this pair. So we go to the next one. All right, we do see now this is all the way last week here. Let me pull up our period separators. All right. And so whenever you're on the 4-hour chart, the period separators, they separate a week. So this is all of last week right here. And so we do see where last week where the market was making its way down, but it gave us a signal candle of this engulfing candle and then a confirmation candle. So if I was trading last week, if I was trading the quarter swing method, I would have jumped in after this candle had printed, and we still would have been in profit up until this point for 7 pips so far, which is, I mean, 7 pips is, 7 pips is 7 pips. If you're trading at a standard, then, that's $70. Um, but this, right now you're kind of in the middle of the move. So I wouldn't try and jump into this one. I would just kind of just be patient, wait for it to either come back around the one spot 1300 price point and kind of wait for some type of reversal pattern to take place to give me enough reason to jump into the market. So there's no reason to rush and jump in the market because we have so many different pairs to go through, and there's no reason to rush. The market is gonna go. The market is gonna be here, so there's no reason for us to rush. Give me 1 second. We're gonna do this. Make sure. All right. Yeah, they can get it. All right. So let's look at the next one. We're looking at EC, which is the Euro Swiss. Again, we're kind of a little bit too late, like, to jump in. I really don't like jumping in the middle of a move, but give me 1 second. All right. All right. So yeah, I don't like jumping in the middle of a move. All right. So let's look at EJ. Same thing, man. I wish I was trading the quarter swing theory last week because we're getting so many signals. Here's some engulfing. All right, and then we also had confirmation, and then we could have jumped in. We could have jumped in today, but we'll wait and see. Kind of the same thing with this one. It is around a psychological price point, one spot 255. So we just keep a watch. This one is kind of bouncing off of the 200 EMA, exponential moving average. So possibly can just take a look at that because the market does kind of use the EMAs as support and resistance. So you can kind of watch that one. And again, whenever I'm trading this strategy, I'm only looking for the market to be at a psychological price point right then and at that moment. All right. And I'm looking for a signal candle. All right, I'm looking for my signal candle, so I then know that I can come back another 4 hours and see if I get my confirmation candle. All right, and so that's why I said this strategy, it takes patience, but you can see, you know, if you just wait, like say, let's just take a look at this portion of the screen. If you just wait and you're patient for your signal candle and your confirmation candle, right, you can catch a really good move. Like for instance, potentially this is a 132 pip move, just for being patient and just waiting to jump into the market when it's most conducive for us to be profitable. All right, and so I don't sweat it. Um, Now this one right here, we're looking at the Swiss JPY. I will tell you right now, I would be watching this one over at 1 o'clock. I would set at 1 a.m. Eastern Standard Time. I would set my alarm, all right, to come back to check to make sure that this, if this gives me a confirmation, a bullish confirmation. Why do I say that?
Okay.
Because we see where prices, the 113.5 price point has been rejected, right? We have our signal candle, which is an engulfing candle. And then at 1 a.m., if this one shows to be another bullish candle, for me, an orange candle, I'm going to go ahead, I'm going to put my trade in, right? And I'm gonna stack my trades, right? Hopefully you guys have gone through the units, the far enough through the units to learn about stacking your trades and twin trading. But all it is, let's say if I want to trade at a standard, which is $10, I'm going to open up two $5 trades, right? And then that way, the market doesn't have to move as far for me to get in the profit. So instead of opening up one trade for $10 and putting, you know, a 10 pip trailing stop, I'm going to put in two trades for $5 and put in a 5 pip trailing stop on both of those. And then that way, all the market has to do is move 5 pips, and I've made just the same amount of money as if the market had moved 10 pips for one trade, but it had to go a shorter distance, and it's more in my favor for the market to go a shorter distance. So just make yourself a note. All right, make yourself a note on the forward chart for the Swiss JPY at 1 a.m. If this prints bullish, excuse me, yeah, if this prints bullish, go ahead and jump in on a buy trade on that. All right, and make sure you know, change your lot size and make it appropriate for your account size. So remember, at the most, only trade 1%. Okay, only trade 1%. Treat this as an investment account. All right, you're gonna be able to grow your account and make more of a profit than you would in your bank anyway, regardless. So in the Forex market, it's not going anywhere anytime soon. So just be patient and just whatever you start your account with. If you started with $50, only trade at 50 cents. If you start with $100, only trade at $1. All right. So make a note, CJ, 1 a.m. If it's bullish, go ahead and jump in with a buy trade if you're going to do the quarter swing. This one, because it's below, I'll say it like this, because it's in between the 400 and 200, I would just wait for this to come out of that range. Now up here, if I was able to get into it up here, then yeah, I would have waited for my signal for a signal counter to jump in. Give me 1 second.
Mm-hmm.
I would, you know, waited for my my confirmation to go ahead and jump in. And but since it's in between, I would just kind of wait. Again, we have several different pairs that's going to give us opportunity. This one right here, the NZD JPY, this is right at a price point. Make another note. This is right at a price point. So it looks like it is above, right? It's currently above the 200 and the 400. We're getting rejection at the 77, the 77 spot price point, right? And so if this one right here, if this one prints as an engulfing bullish candle, right? The body of the candle engulfing this current white candle, that would be my signal. And then so at 5 a.m., right? At 5 a.m., that would be my confirmation, and then I would jump in at 5 a.m. if the 5 a.m. candle, if the 5 a.m. candle prints at or prints as a bullish candle. All right. So make another note: NZD JPY, NZD JPY. All right. Nope, I wouldn't do anything with this. It's just consolidating. US CAD. It looks like the one spot 34 has been rejected quite a few times. One, two times, well, one area, two areas, and now this would be the third area. So we do have a doji candle right here. All right, let me just try to blow this up so you guys can see. We do have a doji candle right here. Remember what I said with the doji candles? This is a point of indecision. The market doesn't know which way it wants to go. Doesn't want to go up, doesn't know if it wants to go down. And so we find that out based on the next candle. So if this candle prints as a bearish candle, which it looks like that's what it's doing right now. If it prints as a bearish candle, I'm going to wait for the next 4-hour candle, which would be the 5 to 9 a.m. candle to print. And if that one prints as bearish, then I'm going to jump in. All right. So make another note for US CAD just to kind of check that. Really, I wouldn't say come back at 1 o'clock, right? Because this is, we're waiting for our signal candle and then confirmation. I would just say come back at 9 a.m. in the morning. And then that way, this 9 p.m. candle would print, and then the 5 a.m. candle would have printed. And then if the 5 a.m. candle is a bearish candle at 9 a.m., jump into your sell, see how far you can ride it down. Just to give you a prediction, I think that if that does happen and print for us, I would try my best to take it down to one spot 335, which is going to give us about 30 pips. So yeah, I would stack my trade. Get yourself 2 trades, right? Get yourself 2 trades and put a trailing stop of 15 pips, right?
Okay.
And then that way, this is, potentially the take profit area, right, is 30 pips. And then that way the market only has to move 15 pips and you're going to get your 30 pips with the 2 trades. Now keep in mind, whenever you stack your trades, you're also doubling your risk, right? You're also doubling your risk. So always be careful with that. Only jump in the trade, when you're confident. But I'm telling you that for me, if this candle prints as bearish and the next one prints as bearish, I would jump in and take it to the one spot 335 price point. Does anybody have any questions so far up until this point?
No,
Anybody have any questions?
I don't have any questions.
Everybody can hear me okay?
Yes, sir.
Hello?
Yeah, I can hear you.
Okay, awesome. All right. I don't know why let me see if I can get my chat to show up. My apologies.
Mhm.
All right, awesome. Control H, that's what I was doing. All right, awesome. Man, I really like this Zoom platform. All right, awesome. Can you hear me? To everyone, can you hear me? Yeah, so I'm gonna mute you guys. I have you guys muted, so if you have a question, just type it in the chat box. All right. All right, so awesome. All right, so that's that one. I am going to slide this one over. All right, so now we're taking a look at silver. I like silver because it's only a 4 pip spread, even though it moves kind of crazy. I like silver, so I really don't see anything. It looks like the market is continuing down for a little bit, so we really don't have any reason to necessarily try to jump in on silver right now. Um, let's take a look. This is the sweet crude oil. Um, Not a very apparent reversal pattern for me, so I would leave that one alone. Um, Same thing with this crude oil pair. I would kind of just leave that one alone for right now. Let's take a look at the Aussie CAD. Yeah, we really don't have anything on Aussie CAD right now. Kind of too late for this movement. You do see where we have this engulfing candle followed by our confirmation candle. Now this was on Friday, and so what tends to happen on Sunday nights, like, so what happened is, even though on Friday the market it closed here. All right, it closed here, but you see here where it kind of jumped up a little bit here. It didn't exactly start where it closed at. And we'll, when we get to another chart, I'll show you this. You'll be able to see it better. But the market, it will make a gap. All right, so that's why a lot of people don't like holding trades over the weekend, all right, because the market will gap and it could skip over your stop loss and just keep going and blow your account. But then again, it could jump in your favor, right? But a lot of people just don't like taking that chance. I will take that chance, but not when I'm trading this strategy. I will take that chance when I'm trading the market beater trading strategy, which is the strategy that I use. Um, just because you get a better idea of what the market is doing, why it's doing it, and you're not worrying about gaps. You're not worrying about gaps because you'll be able to notice what the market makers are trying to do. All right, so that's that one. Um, Aussie JPY. Really don't have a reason to jump into that one right now. No reason to jump into this one right now. Let's take a look at gold. Really no reason to jump into this one right now. CAD Swiss. We might get a reason to jump in because we're kind of getting a signal of a continuation. So we see here where we did have an engulfing pattern here with our confirmation. And if we would have been watching it then, right now we would have been in profit 49 pips. So, if you're trading at a standard, that's $490. But what we're doing is it looks like we may get an engulfing right here. Let me just zoom in a little bit. We may get a bullish engulfing, just kind of letting us know that the market is going to continue up. So if at 1 a.m. this one prints as a bullish candle, and then at 5 a.m. if the next one prints as a bullish candle, then I would go ahead and jump in. I will go ahead and jump in to see if I can jump in on this continuation of the market going up on the gold pair. Nope, that's not gold pair. That is the Canadian dollar versus the Swiss franc. Excuse me. So if you're taking notes, it's not the gold pair. It's the Canadian versus the Swiss franc, or CAD CHF, or CAD Swiss. All right. Just a few more. Just got a few more to go through for this strategy. All right. This is a good one. This is a good chance to jump in. This is the CAD JPY. All right. This is CJ, CAD JPY. And you guys, you will hear me abbreviate the pairs because I've been doing it for, going on what, 2.5 years now, 2 years, 2.5 years now. And so that's just kind of the lingo. When you get around other, Forex traders, they do that. They'll say CJ or CAD-J or, CAD-JPY. They're not going to say the Canadian dollar versus the Japanese yen. So just keep that in mind. So, but this is the CAD, this is the CAD-JPY. All right, so again, we do have where we've had a bullish candle right here. And then at 1 a.m. this one may print. Hopefully it'll print as another bullish candle, and when it does, go ahead and jump in with a buy, and hopefully it'll turn into a good swing trade for you. Euro CAD, really nothing here right now. Silver versus the euro dollar, really nothing here right now, unless this one prints as a bullish bearish candle. Then again, you're going to wait for your confirmation and jump in with a sell on that one. All right, nothing on the Australian New Zealand pair. Let's take a look at the NZD CAD. Nothing on the NZD CAD right now. NZD Swiss, nothing really on the NZD Swiss. Euro, NZD. We have our signal right here. Here's our confirmation. So it's kind of late to jump in right now. If you do jump in, you're jumping in at your own risk. But we did have our setup where we had our signal and our confirmation. Right now, it is in the if anyone did jump in, it's, they're probably negative right now. But I'm confident that this is going to go up and make our M formation. All right. It's going to make our M formation where the market goes up here. And you see it kind of come down here. Then it's going to come up here. All right. And then eventually it'll sell off, probably to come back down to this point right here. But again, we're going to get into that with the market maker method as well. All right, let's take a look at gold, euro, nothing there. And this is really not one of the pairs I want you guys trading right now, is it? Yep, it's only 10 pips. So the GBP, Australian dollar, we really don't have a signal here. And the GBP CAD, yep, this is one of the ones. This is only 10 pips. Really nothing here. So I think I gave you guys signal. I gave you like 4 or 5 pairs to kind of be looking out for over the next 8 hours or so. And so if you decide to trade this strategy, there you go. You have 5 pairs to be looking out for, and you should make some type of profit. This strategy is really good, especially for those individuals who are just starting out, because again, it allows the market to kind of slow down for you, and you're only looking for reversal patterns around these major price points. So it kind of allows you time to take everything in and look over your notes and just be able to be confident with your trade. All right. All right, so that's our quarter swing. Now we're going to move into our market beater trading strategy. All right, and if you have any questions up until this point, feel free to ask them. Feel free to ask them anytime during this analysis. I'm going to do my best to get off as soon as possible because I know you guys want to rest, and we're going to be back up around 2-3 o'clock. So I will be back live to trade live with you guys. So you can take a look and see my thought process, all right, of trading, and you know, just to try to help you guys to develop the same thought process. So I've learned from who I consider the best to do technical trading. And listen, I'm going to tell you guys this. Trading is not so much, I would say this, to trade successfully, it's not so much about the fundamentals than it is about being a technical trader. And I'm going to show you. I'm going to show you. I'm going to show you. Let me do this. All right. And so I tell you what, let me just make sure you guys are still with me. All right. So if you're still with me, all right, where this thing at? I don't know. Let me pull it up. If you're still with me, show me some signs. Show some sign. Let me know you're still with me. If you're still with me. All right. Yes, 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 yes. All right. Love you, ladies. All right. So with the market beta trading strategy, what you have to know with any trading strategy. Oh, it's on my trading laptop. All right. This is my trading laptop. I got this specifically for trading. All right. Because you guys know, even though we can trade, you know, on our phones, I prefer to trade on the computer just because I can do so much more. You can do so much more with it. But so what I did earlier today is I posted inside of the ultimate trading strategy unit, which is the market beta trading strategy. I posted a picture, and I'm gonna do this picture for you now. I'm gonna do it for you live. I posted a picture to show you guys how the US dollar is manipulated by politics. It's manipulated by so much more, but especially politics. So just give me 1 second. All right, I'm gonna put this on the monthly. Let me make this a blank template. Give me 1 second. Let me just do I want to do that? I'll just leave it like this. And so I'm just going to give me 1 second, ladies. All right. Just set this up really good here. All right. So the market is manipulated. Watch this. So all right, so around this time, all right, so what we're looking at right now, we're looking at the USD JPY. All right, this is the US dollar versus the Japanese yen. And you can see this best on this pair. So around 1998, who was in office around 1998? I'm waiting on your answers. in 1998? Who was in office? Yes, Mr. Clinton, Mr. Bill Clinton. He was in office. 1998. Your mama learned to skate. No, just kidding. 1998. Mr. Clinton was in office, right? Now, around, oh, it's okay. I forgot. All right, around 2001, who was in office? 2001, who was in office? Mr. Bush, senior or junior? Ha, Bush Jr. Mr. Bush Jr. was in office. Here's his period. Now, after Mr. Bush, where I'm at right here, around 2004, who was in office? Was he? It was him. I meant around 2008. 2008, who was in office? I'm sorry. Yes, our boy, Barack Obama. And so he's more here. All right. Now, the year is 2018. And who do we have in office now? Mr. Donald J. Trump. Now watch this. Watch this. This is so funny. Watch this. As a new president is coming in office, Mr. Clinton coming in office, the market will rise. I'm going to change this. I'm going to make this blue. Just so you'll be able to see it in contrast. What happened? What happened with Mr. Clinton? It was some type of scandal, right? Ironically, the market goes down. Now it's time for Mr. Bush Jr. to come into office, and the market does what? Go back up. What happens September 11th of 2001? Nine 11 happened. Yes. Market goes down eventually. To be honest with you, let's take a look at this real quick. Let's see what the market did for September 11th. 9. Let's go over 11. I'm gonna zoom in to the daily chart. All right, and I'm gonna let you take a look at September 11th. Here's September. All right, here's our daily chart. This is about to blow y'all mind real quick. So look at this. Oh wait, that's October. I'm sorry. September 11th. So right where, let me make this a little thicker for you guys. right where this blue line is. This is September 11th. I'm just gonna move it out of the way a little bit. And so we do get a spike in the market. In the market, it goes down for a few days, right? So it goes down for a total of 1, 2, 3, 4, 5, 6, 7. It only goes down for 7 days. A major tragedy happened in our country, and our economic currency, the value of our currency, it only goes down for 7 days, for a week. That's kind of weird to me, that after those 7 days, because now you understand, you know, the backlash that was taking place for years after that. You would think that the currency market was going down, but what did it do? It rose. It rose. It's all manipulated, and the market is going to do whatever they want the market to do. It doesn't matter. It doesn't matter what takes place. If they want the market to go up, it's going to go up. If they want the market to go down, it's going to go down. And all we have to do is learn the movements of the market, learn the cycles of the market. Watch this. So a new president, yeah, it rolls even now. Learn this. We're gonna get to the cycles. That's right. So a new person here. I'm gonna unmute you guys too. So if you want to talk to me instead of typing, that should work. But you would have to unmute your audio. And if you're on the phone, if you're on your phone, when you select the little audio, the little audio button right here, tell it that you want to do call via device audio, and that'll let you talk. All right, let me take that off of there. All right, but you can still type if you want. But I just wanted to hello, Ted. Oh, testing. Oh, sorry. Just want you guys to be able to talk. So when a new president comes in, the market is going up. You know, hey, everybody's happy. You know, so they use that time for the market to go up. Once that president is in here, right? Why is it that something always happens, right? We never get a president in office without something happening, right? So, of course, we know we have, you know, Obama, no scandals or whatever. But what happens during Obama's time? What happens during Obama's time? The housing market, right? The housing market, right? You know, yeah, we can argue that, you know, Obama, he inherited a lot of crazy stuff. That's besides the point. During his time, the housing market takes place. And so it drops. Now, Trump coming into office, even with all of the controversy that's around Donald Trump, right? The market still finds a way, it still finds a reason to rally up. And now, already, POTUS Trump is in the office, and yet the market is heading down. I wonder why. Could it be that something is possibly getting ready to happen to push the market down, right? But we see here that the market is already heading down. Why? Because that's what they want. They want the market to head down. It's manipulated. That's all I'm trying to get you to see. Yes, it is manipulated. And all you have to do is learn the cycles of the market. Learn the cycles of the market maker, right? And so that's why I call our market beater trading strategy the ultimate strategy to learn, right? Can it be a little confusing at first? Yes, it can be. But that's why I say take time, study the videos, study the charts, trade with me. Does that mean that we're going to get every single one correct? No. Uh, do they do the strategy every single time? No. But there are enough pairs. We have a total of 30 pairs to look at, right? And there's going to be at least one pair out of the week that the market cycle is going to be done, but it happens. So, all right, so now let's get into the market beater trading strategy. Hopefully you up to this point, you guys have had an opportunity to take a look at the explanation video. If not, I'm going to go through it really quickly, all right? And you'll be able to see exactly what I'm talking about. But you guys just understand that the market is manipulated. Now, with the market, with our market beater trading strategy, okay, we're basically taking a look at the cycles of the market that the market maker makes, okay? All right, so the market, all right, 60% of the market is owned by 5 major banks, right? If you own 60% of anything, you own the controlling interest of that thing. So they own the controlling interest of it, and they make it do whatever they want it to do. All right. What a lot of people don't know is the market makers, they actually they don't have they have access to your terminal, okay? And so not necessarily saying that, hey, they can look at your terminal, they can look at my terminal and see that I have Clinton, Bush, Obama, and Trump on here, but they can look at my terminal and they can see where all of my orders are, they can see where all of my stop losses are, they can see where all of my take profits are, right? And because they can do that, they have software that says that, hey, we have $1 million of contracts up here, right, and $2 million of contracts down here. All right, if you were a business person, which would you go for? Would you go for the $1 million or would you go for the $2 million? More than likely you'll go for the $2 million. And so what they're going to do is they're going to fake the people out up here, right? They're going to go for the 200. They're going to go for the $2 million, but they're greedy, right? They're greedy. And so what they're going to do is they're going to make an attempt to get the $1 million. So what they do is they ride the market up, making you think and inducing people to jump in with buy orders. And then all of a sudden, they're going to drop that market and they're going to hit for the $2 million. If you don't believe me, take a look at the Clinton thing. That's exactly what they did over here. Look at what they did. They rolled the market up, have people thinking that the market is going straight up. Now, all of a sudden, they turn the market around. They have these stop hunts, all right? That's why we call them stop hunts, all right? This is the market makers hunting for your stop loss, right? And so your stop loss is, hey, I'm thinking that the market is, like at this point, I'm thinking that the market is going to go down, but just in case it goes up, let me put my stop loss up here, right? And you're thinking that you're safe from it, but they go up and they shoot that candle up and then they bring that candle down. That's all the wick is. The candle was once like this bearish candle right here. The body of this candle was once all the way up here, 803 pips for the month, but it actually finished down here for a total of 28 pips. They went stop hunting, right? They went taking out the stop hunts, right? They went up here to induce people to go long, and then they brought it right back down. All right, that's a stop hunt, and that's a market maker move. That's what they do. But if you notice, I always say, if you know your ABCs and your 1, 2, 3s, you're good to go. And what do I mean by that? It's a little cryptic, but I'm going to share with you this. Yep, you're going for the 2 million. I'm going to share with you this. The market cycle, it makes M's like I shown you here, M, and it makes W's. Down, up, down. It's gonna go up again. Eventually. Eventually. All right. The market, it makes M's and it makes W's. That's all it does. It makes M's, all right? And whenever it's looking to form an M, it's doing it so it can go down here. Let me just delete these. There is actually a filter that comes with MetaTrader, and all we have to do is come here to our indicator button, go down to custom, all right? Come all the way down, and it's called zigzag. I'm gonna thicken this up. I'm gonna change this color to blue. And it's gonna automatically, you're gonna automatically see these. Look at this. W, M, W. Excuse me. That's all the market does. It makes M's, it makes W's. More specifically, if you break it down even further, there's a cheat code, right? I know, Mom, I think, when you guys had video games coming up in the arcade, they didn't have cheat codes. But me and LaBridget growing up, our video games had cheat codes, right? And so, you can put in the code and go into God mode or something like that. So I remember on Contra, I played Contra on Nintendo. I think it was like up, down, left, right, A, B, start, select, or something like that. For Sonic, it was, I don't know, it was something, ACC something. It's just that we didn't have videos. You guys had arcades, though. You did have arcades. So here's the cheat code. Here's the cheat code. Here's the cheat code. MAAW, and did I do that right? No. Yeah. MAAW and WVVM. This is the cheat code for the market. MAAW WVVM. Why do I say that? The market, if you know your ABCs, I promise you, it may seem like a lot right now. It may seem like a lot right now, but I promise you, stick around and study this and look at the market, and you're going to be like, I can't believe they're doing this. But this is what they do. MAAW WVVM. All right. So let's take a look at this on let's go down to the 4-hour chart. Let's go down to the 4-hour chart. All right. And let me bring this back. MAAW and WVVM. Let me not make that a background so it can kind of flow with us. And I'll tell you what I'll do. I'll make this blue as well. Mom says no. Yeah. All right. And so with our zigzag filter, you can kind of see this a little better, especially on the 4-hour chart. So let's start with the MAAW. All right. So well, really, it's okay. Where we are right now, we're going to see the other portion. All right. Let's take a look at the WVVM. So here's our W. Came down. Here, I'm going to use this. Came down. I'm going to change this to red. This is the overall, right? So it's not always, super clear, all right? But you're going to train your eye and you're going to be able to see it. So first leg of the W, first side of the valley of the W, second side of the valley of the W. You guys think I'll be making this stuff up, huh? W. All right, you see the W? W came up right here, but I'm putting it on this side. But the W came up. All right. What's next in our sequence? What's next? What's the next letter that's in our sequence for? No. We're doing the other side. No, the other side. This side right here. We're doing W. We're starting with W. Yes. Market, it dips down a little bit. It dips up. Doesn't that look like a V? That's a V, right? Crazy, right? It dips down again. Now it dips down with this one candle, but yeah, it dips down again. Then it jumps up. Now, this is also giving us the first leg of our M, which changes the last sequence of the cheat code. So first leg, there's the V, but also it's the first leg of the M. Then it goes down. Overall, it goes up. Second leg of the M. W, V, V, M. Crazy, right? All right, just so you don't think that I'm making this up, that's USD JPY. Let's pull over. I mean, it doesn't matter what pair. I mean, it doesn't matter. I'm gonna do something that doesn't have the US dollar in it. Just so you don't think like I tell you what, you guys pick, just pick a pair. Just type in the pair and we'll take a look at it. And then we'll go further, we'll go deeper into the rabbit hole. I'm going to show you how you're going to make your money this week. Just type in a pair. Just GBP CHL chart window. All right. I'm going to make it blank. Now, this is the market maker's template that I'm going to share with you guys, but I'm just going to make it blank really quick, just so we can take a look at the overall. Put it back on the 4 hour. Okay. I'm going to add in our zigzag. Some pairs, it's a little bit more easier to see, but nonetheless, you're going to see it. What do? We're going to make this one blue. I want to thicken it up so you guys can see it. So again, all day, every day. I'm going to make it a little smaller for us. All day, every day. M's. All right. So let's go with this one. All right. And we said that our cheat codes are M, AAW, and WVVM. All right. I'll make this red just so you'll be able to see it. Now watch this. M, A. Now I say A, but there's really no upside right V other than A, but it's just the upside right V. But so A, this A is also the first leg of the W. First leg of the W. first side of the valley. We see that the second side of the valley is being formed, and it may come all the way down here. It may stop up here, but eventually the second leg of the W is going to take place. This is real time. You guys picked the pair. I didn't pick this pair. You picked this pair, right? This is the pair you picked. So I didn't have time to, sit here and try to analyze it. I showed it to you. I showed it to you firsthand. This is all that it does. This is all they do. MAAW, WVVM. You just scroll through. You see it. You see it all day, every day. All day, every day. Now, we really don't know when it's going to happen. No matter, that's right, no matter which pair. No matter which pair. No matter the pair, it happens. No matter the pair. No matter the pair. And so fundamentally what's taking place is what's called supply and demand, right? But they're in control of their supply and demand. That's how business works, right? If there's a demand for a particular product that you supply, if you have that product, you're going to make money, right? If you don't have that product, you're not going to make money, and vice versa. If there's no demand for it, if you have the product, you're not going to make money. So these guys, they have to make supply and demand. They're in control. They're basically in control of their own destinies, right? So I mean, these people. You have the Rockefellers, you have the, whoever else. You have these individuals. So, so what we want to do is we're not going to fight against them, right? Listen, this is a $5 trillion a day industry. So we're not going to fight against them. We're going to trade with them, right? And so that's why we have the market beater trading strategy. So again, me personally, I like to use my smaller pairs, except for the GBP NZD. That is a 14 pip spread, right? But that is a very trendy pair, right? Down here in the orange square, this is our average daily range indicator, right? So it's just letting me know that for this pair, which is the EG, on an average, this pair moves 62 pips a day, all right? And right now it's moved 26 of the 62. Now, does that mean that it guarantees me that it's going to move at least 62 pips? No, it doesn't. It doesn't mean that it guarantees that, but just on average, that's how much it moves. And I'll share with you how we use that information to our advantage a little bit later. But what I want to show you with the GBP NZD, the reason why I jumped on this pair, right? I used to be afraid of this pair because of how quickly it moves. But let me show you this market beater trading strategy. Let me get this thing to show up. 1 second. How do I get this thing to show up for me? I always have problems. Okay, there we go. I always have problems with this thing. So this is why I love this pair. Now this pair, it does jump all over the place, right? But it's a very trendy pair. And look at the ADR. The average daily range is 200 pips. 200 pips in 1 day on average. In 1 day on average, right? On 1 day, it's already moved 50 pips. Yeah, wow. And so I used to be afraid of this pair because I would always see people make videos and post about the GBP NZD. One of my mentors, and I don't mind sharing with you guys who my mentors are, but Yusef Scott, he does the so darn easy Forex movement check him out. He's an awesome inspiration, African American male. He's into real estate, but this guy, he has his account built up, so much that, he's throwing like $150 standards, on his trade, and he's making 62 grand, in a few hours. I think his most recent video, he made like 65 grand in about 12 hours. Uh, One major one that sticks out to me, he made like, I think it was either like 125,000 or 175,000 in like a week and a half, and he did it off of this pair. But like I said, his account, he just has enough strength in his account. I can only imagine he probably has, at least, $200,000 just in his Forex account to be doing, $150 lot sizes. So, but that's why he's able to make that, and that's why he uses this pair, because it moves very fast and it moves a lot. So, what I've been doing is I've been studying this pair. This is the pair that I have been studying, trying to get acclimated with its market cycle, right? That's all the market does, MAAW, WVVM. And so I've been getting acclimated with it. And this is the pair starting this week that I'm going to be trading from. I don't recommend you guys to necessarily trade from it until you've actually like studied the pair. I recommend you guys starting with the lower pairs, like the 2 pip and 3 pip spreads. Those typically move a little slower, like your Euro USD and your USD JPY, right? Study those, practice those. Use the inverse pairing trading strategy. My favorite pair to do that with is the USD JPY, and then also the gold. All right, they go inverse. So typically, if USD JPY is going up, gold is going down. So it kind of allows you to it's kind of like a cheat code, really. Like, it's a no-brainer. Okay, if these are inverse pairs, then if one is going up, the other one is going down. So hey, if gold is going up, since USD JPY, it's only a 3 pip spread opposed to gold, which is a 5 pip spread. Now that's bad. That's bad when you've been doing it for so long that you can just call off the pip spreads on these things. But typically, if I did that strategy, or when I did that strategy, I would trade on the USD JPY, because it was, again, it was only a 3 pip spread and gold was a 5, and so I would use gold to tell me how to trade on the USD JPY. All right, until I got this strategy down. So the GBP, this pair right now that I'm showing, this is the pair that I will be trading on my personal one, and then on our training account, I'll be doing the 2 through 10 pip spreads for you guys. All right. Okay, so I'm sorry. Let me take a breath. So now the market beta trading strategy. All right, and this is just going to be a quick review. All right, you guys make sure you go in the let me see what unit that is. When you get a chance, be sure to go through all the units. Okay, I will tell you that. I know some of the videos are a little long, but watch is I would recommend you watch all of it. Just take your time and watch it. And if you have any questions, let me know. But Unit 11 is our advanced trading strategy. Oh, excuse me, Unit 12, which is the ultimate trading strategy. All right, and so that is the market beta trading strategy. Take time and study that. All right, take time and study that. So this is just a quick recap of that strategy. All right, so you guys already know the market is manipulated. I showed you proof. I showed you how the president's coming in, going out, how even, you know, 9/11 happened only for a week, the market went down, and then after a week it shot up, you know, even though the controversy behind 9/11 was going on for, you know, years to come. And even now, you know, we still talk about the conspiracy and the controversy around 9/11. So you know that the market is manipulated. It's said that life happens in threes, right? Usually, you know, if one thing happens in life, you know, it's going to happen two more times around the same season. All right. And the market makers know this. They know that that's a psychological thing. And so the market, they move the market in threes too. They move the market in three levels. All right. So they'll have one level, two levels, three levels, and they'll reverse it. And then they'll reverse the market, and then they'll go another one level, two level, three levels, and reverse it. And so that's where we get our M's, right? Our M's are formed when the market is wanting to go down, right? And then we also get our W's. Our W's are formed when the market wants to go up. Let's take a look at the USD/JPY. All right, I'm just going to minimize this so you may not be able to see my face. All right, so this is let me explain this template for you guys really quickly. Okay. And eventually you'll be able to trade this without okay, you still can see me. Awesome. You'll be able to trade this without this template. All right. And the template should be uploaded already in the file section in our group. If it's not, I'm gonna go back and check and make sure I get it uploaded, and I'll show you guys how to apply the different templates as well. All right, so but with this template, what this template has is this gray box, right? This gray box is our Asian session, okay? This top, well, I'll just say this dim gray, this dark gray box is our Asian session, all right? It marks the Asian session. The light gray boxes, they mark our stop hunts. Okay. All right. So this is how the market beta trader strategy works on a daily cycle. All right. You're going to have a period of consolidation. All right. And that period of consolidation is the Asian session. Right. And so the Asian session runs from 7 p.m. to 4 a.m. Right. 7 p.m. to 4 a.m., but they actually stop at 3 a.m. because that's when the London market opens. So I'll just say from 7 p.m. To um, um, uh, 3 a.m., that's the Asian session. And as you see here, there's not much movement. And so what we look for, we're going to wake up in the morning, right? We're going to wake up around 3:45, right? And we're looking for what I like to call the Mona Lisa trade, right? And so what that is just a perfect setup. Let me pull up the chats just to make sure. All right. And so we're looking for the perfect setup. You are looking for the perfect setup. If you don't see the perfect setup, you do not trade. Why? Because you're not used to trading this. All right. And we don't want you getting want you getting psyched out. Okay. So you're looking for this perfect picture. All right. You're looking for the Asian session. Let me hide this ask line. You are looking for the Asian session right here to be no more than 50 pips. All right. And so right here, if we look here, let's just go up here and you can see this one better. You can see this better. We're looking for the Asian session to range no more than 50 pips. All right. The range for this Asian session on December 13th was 12.9. All right, so that's what we're looking for, right? So the Asian session is no more than 50 pips. And now look what the market does coming out of the Asian session. What's formed for us? The market goes up, all right, hits the stop hunt, comes down, It goes up, hits a stop hunt, and then what does it do? It comes down. What did I tell you guys the market does? It makes what? It mainly makes M's and W's. So coming out of the Asian session, right? Let me see. Got one more chart. Yep, M and W. So coming out of the Asian session, if you see that that market is going up, what you're going to do is you're waiting for a M to form. We're on the 15-minute chart, right? You're waiting for an M to form. So typically for the perfect setup, okay, the perfect setup around 345 is when the market maker will be forming the second leg of the M, okay? We're not looking for it to not be completed, right? We're looking for the second leg to be forming, okay? And so you're looking for the market to have gone up, come down, gone up again, and now you're looking for a signal to get in. Where's our signal to get in? This candle right here. This candle right here. It's another engulfing pattern, right? So 345, you're looking for a reversal signal. 345, you're looking for a doji candle. You're looking for railroads, right? You're looking for an engulfing candle at 345, all right? From that 330 to 345 candle, that's what you're looking for it to give you. And if it gives you one of those, that's what we call a Mona Lisa trade. And if it gives you one of those, you get in. Now, this was not a Mona Lisa trade on this day, right? Why? Because on our terminal, 345 is 1045, all right? Our terminal shows us the GMT, all right? The Greenwich Mean Time, okay? And this is just so everyone can be on the same page around the world, right? So when you come to your terminal, if you're using FX Glory and you're here on the East Coast, at the candle that runs from that starts at 10:30 and ends at 10:45 on the 15-minute chart, right? That's the one that you want to give you that reversal pattern. And if it does that, then you want to go ahead and jump in that trade, all right? So again, this was not a Mona Lisa trade right here, right? So if you first starting out, I wouldn't suggest that you jump into that, but you still could have been patient and you would have been like, okay, it's only giving me one side of the M. Let me just wait a few minutes, wait for it to come back up around this point right here, and drop down and give me my signal and confirmation. All right. So even though it wasn't a Mona Lisa trade, if you were patient and you had the eye for it, you could have jumped in. All right. And listen, you're not trying to be greedy. You're not trying to be greedy. You're not trying to be greedy. I'm going to show you how to turn this into a swing trade and when you should turn it into a swing trade, but you're not trying to be greedy when you're doing intraday. The only thing you want is 25 to 50 pips because you're building on your account. All right. 25 to 50 pips on a standard lot size, which is a $10 lot size, is $250 to $500. You don't have to be greedy, right? In a few hours, you made 250 to 500. Yeah, wow. Amen. All right. You've made that. And you know, I'm always, you know, going to the standard, you know, and realistically, you know, most people are not starting out, you know, with an account size where they can do the standard. Like, so if you're only doing $50 or, you know, $100, you know, if you start with $100, you're trading at $1. So you just made $25 to $50, right? That's $25 to $50 more than you had, right? And that's in one day. All right, let's say you're pulling in $50. Five times five is 25. That's 250. That's $250, right? A week that you're adding to your account. All right, so you can compound, and even though you're starting off small, right? I started off small, and even though you're starting off small, like you're growing your account, right? And your account is not, it's not to the point right now to where you can live off of it, but it's getting there, right? It is you're getting to that point, and so you have a goal in mind, right? You say, you know what? I'm going to build my account up to $500 right now, right? And, I do need this money. I need this money to help me out. So anything over $500, I'm going to withdraw at the end of the week, right? So if I make $1,000, right, that means that I'm going to draw 500 and I'm going to keep, 500 in there, all right? And you build on that. You say, okay, now I'm not taking anything else out until I get to $1,000. And once I get to $1,000, anything over the 1,000, then I'll live off of that. And you just keep taking it up incrementally. All right. My goal is $100,000. If I get, not if, but when I get to $100,000, I'm not doing anything else but pastor and trade Forex. All right. I don't care about owning my own business, working my own business. I am going to be a full-time. I know that's right, amen. I'm going to be like I mean, we're considered to be, full-time traders anyway, because this is what we do. All right, this is yes, this is what we do. But I'm sure enough going to be, that's all I do. I'm going to be like my mentors. I'm going to be like my Yusuf Scotts. All right, and that's all I'm going to do is trade Forex, and live off of live off of that. But anyway, so intraday, right? You come to your terminal, you see that the market is going up. Look for the M. Catch them. Now, let me talk to you about these cycles, all right? Let me talk to you about these. These are the rules. This is what you want to do, all right? That's for intraday. So you come in, all right? And these are the phases, all right? Excuse me, I'm so sorry. But you have, and while I'm talking, let me just, pull up the, trying to pull up the chat. Right here. All right. So that's for intraday, right? Intraday, you can come in, that day and just look to see which way the market has gone so far for that morning. And based on whichever way it goes, that's the letter that you're looking for. You're looking for the M or the W. All right, so here are the phases. You have accumulation, right, which is our Asian session. We're not trading our Asian session, all right? Just because all it does is it just ranges up and down. You're really not going to make any money. All right, so you have accumulation, and then you have your stop hunt phase. Your stop hunt phase is the phase that coming out of the Asian market, right? It's the false move of the day, right? We see how it went up. It falsely went up, but the real move was the major move. The real major move was going down, right? This thing went down for 61 pips, That's nothing to wince at, trading at $1, that's $61 that you made, right? And so, 6 times 5 is 30. So you're looking at over $300 for the week, if you're, if the market gives us that every single day, right? So again, your phases are accumulation, stop hunt, which is the false move, right? And then the actual move, which is the second leg of the M or the second leg of the W, right? So that's intraday. That's what happens on the intraday. Now, the real move, the real thing that you look for is the weekly cycle. And again, I go over this in the unit, just check the unit out, but there's a weekly cycle. And that's the cycle that I trade on. Like every now and then, yes, I'll jump in, right? And I may do intraday, but my main thing I'm looking for is the weekly cycle. And before I move on to the weekly cycle, I want to show you this. And I'm gonna pick Sister Bridget out on this because we kind of went over the teacups. When you look at this M, what does this look like to you? Waiting on you to respond. What does that look like to you? It looks like our teacup. It looks like our Beauty and the Beast trade, right? But it's an M. Remember I told you earlier that all of the trading strategies that I shared with you guys are leading up to this one major trading strategy? If you can do the teacup, you can trade this strategy. So what's the rules of our teacup? Watch this. Let me zoom in. Let me find. The rules of our teacup is this. We have a bearish candle, followed by a bullish candle, followed by a candle with a lower low and a lower high. We put in a sell limit right here, and we wait for it to what? Come up, come past this, and it comes down, and it activates our sell limit. Now, I tell you guys with the teacup, you're typically shooting for around 10 pips. But now you have the understanding of the market cycle. If you in actuality see the M, why only go for 10 pips when with the market cycle, you can do 25 to 50 pips? It all adds up. I wasn't just throwing stuff in there. All right. Listen, I have been doing this enough times, and I have been across every single strategy you can think of. And when I decided to create my own community, there were a certain strategies that I wanted to implement. And now you see why I wanted to implement them, right? We have our teacup, all right? And not only do we have our teacup, watch this. Let me throw this in for you guys real quick. Not only do we have our teacup, but we also have our quarter swing strategy. Here, watch this. We'll take it to the 4-hour. Let me take it. Let me go back to where we are, to where we were. And I think I'm blocking it. All right. I think it was over here. But you see, even with the market maker template and strategy, you see how they still using our quarter swing theory. Comes up, makes a little M. Now the 4-hour chart, like you won't be able to see the intricate M's, but you can see the larger M's, right? And they're a little bit more disproportionate, but you still see where the market came up, right? It came up to one spot, 145, right? Came up. It went down just a little bit, but then it came up, and right around our whole number of our quarter point swing, it made a reverse. So I wasn't just, again, I wasn't just throwing in strategies, but I really want to help people. I really want to help individuals who have never traded before. So I implemented the easy strategies that lead up to the market maker trading strategy, just to help you to get a basis, and then just to build on top of that basis. And now you see why. Right now you see why. You saw that M, and you saw the teacup. Here's another M with the teacup. Not very apparent, but here's another M. All right, here's another M teacup. Okay, all right. We're going super long, so let me just kind of get to the point, all right? Because this is just supposed to be an analysis and just the overview. So I apologize. With the weekly cycle, let me see. We got 1, 2, 3, 4, 5. This should be Monday. Monday should have been here. Yep. All right. So what I trade is the weekly cycle. So I'm looking at the bigger picture, and you're going to be able to see this better on the 1 hour time frame. I'm looking at the bigger picture for the week. So on the weekly cycle, I'm not trading Sunday, Monday. All right. The market opened at 5 p.m. on today. If I wasn't doing this video, I probably wouldn't even looked at it, right? I wouldn't have looked at the market today, all right? So Sunday, Monday, those are our trap days, right? And so again, there are phases to this thing. You have the accumulation phase, the stop hunt phase, and then your trend phase, okay? So on the weekly scale, Sunday, Monday is our trap day, right? That's why I always tell you guys, Sunday, Monday, and Friday, I don't trade. I don't trade. I don't trade. Now I may trade on Friday, and if I do trade on Friday, I'm trading the quarter swing, right? I'm trading the quarter swing, and I'm looking for the engulfing reversal patterns because those typically stick, and I'm trading at super low lot size because I know Fridays are typically trap days, but generally speaking, I don't trade Sunday, Monday. I don't trade Friday because those are the trap days, and you'll see why. So here's Sunday, Monday, right? So what you do for the weekly cycle on the market beta trading strategy, you let Sunday, Monday pass, right? You let Monday pass, and you come in on Tuesday, all right? You come into your terminal here on Tuesday around 3 o'clock. And you take a look back at Monday, right? And you see that on Monday, they trapped the buyers, right? Remember I told you guys about the stop hunt? All right, you see that? The stop hunt? So they went up, made an M, stop hunt, came down, went back up, stop hunt. They trapped the buyers. They tricked the buyers and making the buyers think that they were going to take the market up that week, and they didn't. So on Tuesday, I'm looking back and I'm saying, okay, they trapped the buyers, so that lets me know the cycle for the week is going down, right? And so now on Tuesday, what I'm looking for is, since the market is going to go down, I'm looking for some type of M formation, right? And so this is on the 1 hour chart. And when you start developing the I4, excuse me, you'll be able to trade on the 1 hour chart, and you don't necessarily have to look for, a M per se, but you'll be able to look, for like your reversal signals, like how we have an engulfing here, right? But what we want to do is we want to trade away from whatever peak formation was made, and in this instance it was an M formation. The M formation is the peak formation here. Some weeks it may be the W formation, right? And you just invert it, right? It could be the W formation, and that means that they're trapping the sellers and they're taking the market up for that week. But we see last week they trapped the buyers, right? They trapped the buyers up here and they pushed the market down, and now you come to your terminal on Tuesday, and this is what's called the safety trade, all right? This is your safety trade. You take this trade because you know that they're not gonna take the market back up here because they have buyers, right? They have buyers trapped, and so they're gonna let them sit there for a little bit. Now they will eventually come back up here, okay? But they're gonna let them sit there, okay? They're gonna let them sit there for a little while. So this will be your safety trade, all right? Basically, I want to trade in the opposite direction, all right? of the peak formation, right? So it's the M, so I want to trade going down. So this is your safety trade. You jump in here, all right? Once you get your confirmation, and you pretty much ride this thing down. Ride this thing down 77 pips. You know, if you're trading at $1, that's $77. All right, that's $77 for that day. If you're trading in a standard, that's $770. All right, for that day. All right, so that's your safety trade, right? But now, what I trade for is what's called the midweek reversal. And that midweek reversal, even though it's called midweek, it can happen on Tuesday, it can happen on Wednesday, it can happen on Thursday. You just have to look for it. And so what we do is we know that, okay, they trap the buyers, right, on Monday. They trap the buyers with an M shape. So on my midweek reversal, I'm looking for a W shape. And so what do we get on Tuesday? We get the first leg of the W, right? It comes up, and even though it's small, we get the second leg of the W, and then we get our confirmation that it's going up. Now we ride this thing up. I mean, potentially, you're looking at another 74 pips, right? So we just made 77 on this side, and then we just made 74 on that side. Let me add this up real quick. 77 plus 74, 151 pips, right? So even if you're trading at $1, right, you just increased your account by $151. Why? Because no, I'm not trading on Sunday, Monday. No, I'm not jumping in on Tuesday, you know, just for any day. But no, I'm going to be patient. I see that they trapped the buyers on Monday, and so now I'm waiting on my opportunity to further take it down, because they're not going to go back up there and release those buyers right now, right? And so look, you have individuals who they've had contracts, and you get these hopeful individuals. They sit there and they let the market go against them. They let the market they let their accounts be in the negative, just hoping that the market comes back up. But the market is not going to go back up right now. Why? Because the market makers for this week, they want to take the market down. And so if these guys were actually patient and had the knowledge and the understanding of the market maker cycle, they would have waited until Tuesday, look back to say, okay, they trapped the buyers, so now I'm going to trade with them instead of against them. 77 pips on this side, 74 pips on that side. You just made 151 pips. You just made 151 pips. Does that make sense? All right, awesome. I know we've kind of been at it for a little minute, but I want to make sure you guys got it. Sorry. Um, I know you're not going to get it. Awesome. Yes, yes. I know you're not going to get it right away, but that's all they do, right? That's all they do. That's all I trade. Okay, that's all they do. That's all I trade. And so tomorrow, like, I may throw out some signals for teacups. Yeah, I might do that, but now you guys know what I'm trading, and I want you guys to go and study this thing. All right, they're only looking to make M's. They're only looking to make W's. Right. So now, remember I told you what the cheat code was, right? So last week, obviously, the cheat code that they used last week was MAAW. All right, let's see it. Let's see if I was lying about that being a cheat code. M A A. I'm just gonna bring it on this side so you'll be able to see it. What comes after the A? W. I know you guys thought I was lying. This guy doesn't know what he's talking about. All right. That second leg of the W is also the first leg of the M. It does it again, M. What comes after M? A. Making another A. Watch. Watch this tweet. You're going to see it come down here for the second A, which is also the first leg of the W. Then it's going to make this valley. Then it's going to make the second leg of the W, which would be the first leg of the M. That's all they do. That's all they have. That's all they have. But people don't know this. All people know are the fundamentals. Let me go get a book. It's not about fundamentals. It's all technical. It's all technical. It's all technical. And there's some other little technical things that I can show you, that I'm going to show you this to even show you how to scalp the market. Here, watch this. Let me get rid of these. I should have used my I have a software on my computer called Epic Pen that kind of lets you write on your computer screen, and I probably should have used that. But whenever you have a large candle or a large move, the market is going to give you 50% back on that candle. To show you, I'm going to pull out the Fibonacci. And you guys know I don't typically, I don't like Fibonacci too much, but let's take a look at this long candle. All right. So with Fibonacci, you want to go when we were looking, answering this one, it says, so the market may go down now due to Trump's situation and his personal attorney. So when we looked at the USD JPY, we see that it was already on its way down. So yeah, they could be using, it's very possible that they could use that as a quote unquote reason for the market to, continue down. But us being educated and technical Forex traders, we already know that, hey, the market is heading down anyway. If that's the reason why you want to give us that it's going down, fine. But we really know that you guys are pushing prices down just so you can shoot them right back up. So it's what, 2018, we're going into 2019. I don't think Trump would be back in office. So again, remember, when a president is on the way out, the market goes down. When a new president is on the way in, the market goes up. So the fact that the market is going down right now on the monthly time frame, but anyway, I'm not going to get into that. That's a whole nother. Okay, that's me being a conspirator. I call it a conspiracist. So that's me being a conspiracist, but whatever. All in all, it's all working towards the end game. And if you're a Christian, it's working towards our favor. So here, let me show you this Fibonacci. All right. So with the Fibonacci tool, you want to go in the direction that the market was going. So this is a bullish candle, so we want to go up. All right. All right. So look, this bullish candle went up, right? And here is this line right here. is this red line. It's the 50% retracement line. Whenever you get a large candle like this, whenever you get a large move, they're going to always come back and give you at least 50% of that candle. Now, in this case, they gave you 100% before they moved on in the direction that they were going to. But whenever you see this right here, feel free to pull out your Fibonacci. If it's a bullish candle, you're going to start from the bottom and drag it all the way up. You're going to look for the 50%. You're going to put in your sell, and you're going to let that bad boy ride down to the 50% mark. Or you can scalp it really quick and put in, like I said, you can stack the trade, right? And put in two trades for 5 pips, right? And then that way, all the market has to do is move down 5 pips and you just gain 10 pips, right? And so if you're trading at, let's say, you know, $5, you know, $5 lot size, so both of those trades would be $2.50. You know, they move 5 pips individually, but 10 pips together, you just made $50, you know, in a matter of, you know, however long it takes, a few minutes, an hour. Like, I don't know too many people that's making $50 an hour. So, but you're a Forex trader and you can do that. And so that's an easy way to scalp the market. Let me show you, that's off of one candle. Let me show you what it looks like on like one big move. So basically what we would do is I'm gonna delete this out the way. So here's our swing, right? This is where the market started down. This is when the market started to turn, right? It started to turn from here. And then here's our other swing. It started to turn here, right? And now, here's our 50% line. Let's see if I can make that line. No, I can't. I probably just need to change the color. Let's try this green. All right, you can see that green. All right, so down here is where it started to go up. This is our swing, and then it started to go down here. Let's see, when it went up, did it at least give us 50%? Yes, it did. It went all the way down past our 61.8%, came back up to our 38.2%, and then it went down. But the main thing I'm trying to show you is whenever there's a major move, whenever there's a major candle, they're going to give you at least 50% of that back. And again, you see the market, it did come down to this point. So again, once you got your confirmation, right? I'm not saying just to jump in it, right? So we still wait for confirmation. We still think about our reverse candle patterns, right? And so for me, you know, I'm looking for my dojis. I'm looking for my engulfing candles, especially. Right. And so to be honest with you guys, like, you know, I just believe in being, you know, I'm totally honest with you. I don't see where it would have gave me a signal to jump in here. Right. For me, now there are other reversal patterns, and I've shared that with you guys. Just go through the candle unit, right? It talks about the reversal patterns. But for me, I like a safety trade, right? I like the trades that are more conducive for me to be profitable. And so even though, like, you know, I'm sitting on like pins and needles wanting to jump in the trade, like, I don't do it unless, like, I just follow my rules, right? And that's the only way that we're going to be successful. Do I do it every single time? No. Like, you know, I have times where, like, I just don't do it. I allow myself to trade emotionally, and you never want to do that. So, you know, I really don't see a reason for me to jump in here. The only time I see a reason for me to jump in is with this engulfing candle right here, which, you know, hey, you know, some people might say, hey, you know, you're missing out on all of this, but I'm not greedy. I just need a little bit of the market. This is a $5 trillion market. All right. I just need a little bit of pie. I even heard someone say, you know, just let me lick the knife. Right. All right. Just let me lick the knife. You know, I might cut my tongue a little bit, but hey, you know, just let me lick the knife and I'll be good. So whenever you see a major candle, whenever you see a major move, the market will give you 25%, give you 50% of that candle or of that move back, and you can just scalp the market really quickly. All right. So we've gone over the analysis for our quarter swing theory. All right, I actually went through that. We kind of did a recap of the market beta trading strategy. All right, well, we'll we'll just study the video and we'll get into the analysis portion of it. But you certainly have. I've gone through enough to where you should get it somewhat. You know, I'm not saying like, hey, you know, you should have it, you know, down pat. But hey, when I jump on here in the morning, you guys will kind of know what I'm looking for. And actually, I won't be on in the morning, but Tuesday morning, and we'll see if we can take advantage of this market before Christmas time. So we have several different pairs to go through, all right, and you know, find it. Let me check to make sure. This template should already be up, and it's not, but I will go ahead and upload this template for you guys. Let's talk about this TDI indicator really quick, and then this will be the last thing. All right. And I go over this in the video, in the training video as well. Let me pull the chat back up just in case you guys have questions. With this TDI, all right. This helps with the market beta trading strategy and then also the quarter swing. All right. So with this TDI, I call this the RSI indicator on steroids. Excuse me. Let me just delete this local time. All right. If you know anything about the RSI indicator, it measures the momentum of the market, right? And so this thing here, it measures like the momentum of the market. But again, this is like the terminator, like of the RSI, all right? And so the main thing that we look at is the green price signal line, right? This is the green price signal line, all right? And so what the TDI, it has levels of 68, 50, and 32. All right. Whenever the green price line is above the 68 or close by the 68, the market is in an overbought condition, and you can look for it to sell. All right. Whenever it's down by the 32, the market is in an oversold position, and you can look for the market to eventually start pushing up. All right. Now, what you do with the market beta trading strategy here, let me just go. Let me go back to Euro USD because we've been looking at that one for a little bit. All right. So with the market beta trading strategy, this kind of gives you a signal of when the market is going to drop off. So it produces what we call confluence. Confluence is just evidence, right? It's just agreeable evidence for you to take your trade, right? So you're looking for confluence. Right here, like even though it's the Asian session, we do have a little bit of confluence, right? So we have a stop hunt up here, all right, with a bearish candle. And then when we look down here, let me take this off of this one. When we look down here, we see that the green signal line, it's above the 68, right, level of the TDI. And so it lets us know that the market is at an overbought position and it should be ready to go down, right? So what does the market do? It eventually goes down, right? And so whenever the green signal line is outside of the blue Bollinger Bands, whether it's top or bottom, I like to call that a shark fin, right? That's a shark fin out of the water, right? Think about Jaws. Think about the movie Jaws. Whenever they saw that shark fin, you knew that the shark was getting ready to bite. Okay, and so whenever you see this shark fin, you know that you're the shark, right? That's your fin, and you're getting ready to take a big chunk out of the market. So we got the red. We have the green shark fin out of the water. Right here, it's not that noticeable, but it's out of the water. It's very noticeable here, right? But here it's out of the water, right? And so that's one confirmation, right? And so if you are an aggressive trader like I am, my confluence again, it is my engulfing candle, right? And then I got this shark fin out of the water. Benny is in a sell position right now, right? I'm in a sell position. That's for me. That's enough. But a safer trade would be to wait for the green signal line to cross the red. Excuse me, it's for the green price line is to cross the red signal line. And I call that blood in the water, right? We have the shark fin out of the water to let us know that the shark is getting ready to bite. And then when the green price line crosses the red signal line, that is okay. The shark has bit, right? And now there's blood in the water. You should that's your confirmation. You want to go ahead and jump in the trade. Okay. All right. And now you see here, I'm gonna pull up my crosshairs. So again, you see here where you got the shark out of the water, right? Up here, shark is out of the water. And then right here, you got the blood in the water, right? The green price line has crossed the red signal line, right? And now the market is going down. Now you're in your trade. You're in your trade. You're in your trade. And so let's say if you would have caught it from here to down here, you're looking at 84 pips. So that's how we use the TDI, right? That's how we use the TDI. And again, you're gonna see more of that the more that I trade with you guys. So hey, this is what it's all about. There are Forex groups all around the world who are meeting now. All right. It's just one of those things, if you're serious about trading, people go to school for different industries, different concentrations, and so you have to be willing to put in the time. But thankfully, I was able to eventually be a part of finding this stuff out, and I'm trying to bring it to you guys so you don't have to go fully on the journey that I had to go on. So that's going to be it for tonight. It's going to be it for tonight. I think we got started late anyway, trying to get in. So you guys have any questions for me if you're with me? I am going to upload this this session for you. So you guys have any questions for me? If not, we're going to go ahead and get out of here. Okay, no questions. I'll be reviewing. Okay, all right. I'll be reviewing the units this week. Thanks for the session. Yes, ma'am. Anytime. Awesome. Yeah, I'm here. I'm here for your success. Feel free to ask any questions. Post the questions in the group. Post the questions in the messaging group. You can feel free to message me privately if you wish, and I will answer any questions. And so it's just a part of being a part of my group. I just want to make sure everyone is successful. And like I said, that's the reason why I chose the strategies that I've chosen, to just make it easy, even, for the beginner, all the way to, until you're comfortable to do this advanced portion. You can do it. You can do it. I tell you, it doesn't matter your age. It doesn't matter your color, your race. You can trade Forex. Again, it's more technical than it is fundamental. And don't get caught up in the fundamentals because they use the fundamentals against us, right? But just we're good. You guys are in a good spot. You're in a good space. I'm not going to take advantage of you or anything like that. I really want to see people successful. I really believe in Forex, and I believe in you guys. So, um, you know, you don't necessarily have to start with the market be the trading strategy. The easiest strategy to start with is the inverse pairs. So go back and take a look at the inverse pairs. And from there, move on to the teacup, move on to the quarter swing, and eventually, come back to this market beta trading strategy, because I'm telling you, this is where it's at. And just make sure you watch the video. I go into greater detail about finding the levels and things of that nature. So, all right, guys, I appreciate you guys. I appreciate your time. Thank you for hanging in there with me. Again, I just want to try to be as thorough as possible. So, all right, I'm going to get out of here. All right, you two, as always, if you stay in God, you will stay in control, and happy pip fishing. All right, guys, until next time, y'all stay blessed. Bye.